Sometimes a stock doesn't just move, it explodes. It's one of those sudden, dramatic shifts that leaves everyone asking, what on earth just happened? And more importantly, what's next? Today, we're going to decode one of those exact moments for a company called XBIO. Let's dive in. So let's get right into it. On October 7th, 2025, a company called Zenetic Biosciences, or XBIO for short, saw its stock price just rocket upwards. We're talking a massive 32% gain.
And get this wasn't some slow and steady climb over a few weeks. This entire gain happened in one single trading session. It was a monumental shift that completely changed the narrative for this stock.
And look at this number. Almost 300,000 shares changed hands. Now, for a huge company, that might not sound like a lot, but for XBIO, it was a colossal spike. Their daily average was just a few thousand. This is a crystal clear sign that some big money just woke up and took notice. So, this is the crucial question, isn't it? What's the story here? Was this just some random one-day fluke? Or does the data tell us something much more profound is happening under the hood? Well, we're going to walk through the technical analysis to figure that out.
First things first, we got to set the stage. An incredible breakout like this doesn't just happen in a vacuum. To really understand how significant this is, we have to look at where the stock was coming from. And this timeline just illustrates the journey perfectly. After hitting a high way back in July, the stock spent months in a pretty clear downtrend, finally bottoming out in August. September was just quiet, choppy, what analysts call a base building phase. It was basically like a coiled spring, just getting wound tighter and tighter, waiting for a catalyst. And boy, did that catalyst arrive on October 7th.
Okay, so the breakout happened. It was massive, but was it real? Let's move on to the evidence and see how analysts actually confirm if a move like this really has legs.
The very first thing traders look for is something called volume confirmation. The logic here is really simple. If a price makes a huge move, you want to see a huge number of shares traded to prove that there's real conviction behind it. It's the difference between a whisper and a roar. Now, what's just wild about this is how dramatic that difference is. XBIO went from an average of a couple thousand shares a day to nearly 300,000. This wasn't just a roar, it was a sonic boom. For any technical analyst, this is Exhibit A that the breakout is absolutely legitimate.
But the evidence doesn't stop there, not even close. It's like a whole chorus of indicators are all singing the same bullish tune. The price blasted above all the key trend lines, the moving averages. We got a classic buy signal from the MACD, which tracks momentum. And other tools like the PSAR and on-balance volume are basically screaming that a wave of money is flooding into the stock, confirming this new uptrend. And then there's this. The Arun indicator is designed specifically to identify when a new trend is starting. An Arun up at 100 and an Arun down at 0 is literally the strongest possible signal it can give. It's the indicator's way of shouting from the rooftops that the old downtrend is dead and a powerful new uptrend has just been born. Okay, so the case for a new bull trend seems overwhelming, right? Well, this is where the story gets a little more complex. Because at the exact same time all this great stuff is happening, a few warning lights started flashing on the dashboard. So let's just quickly recap the bull case. We have that massive, undeniable volume. We have the MACD crossover, the perfect Arun signal, and the price is hurdling every key trend line. It's an incredibly strong foundation. But here's the catch. The move was so fast, so furious, that it pushed the stock into what's called overbought territory. Indicators like the RSI, the stock RSI, and the money flow index are all at extreme highs. Now, this doesn't mean the new trend is fake, but it does suggest the rally has gotten way ahead of itself and might need to take a breather. And the analysis report puts it perfectly. These signals are a warning that a short-term pause or even a little pullback is highly probable. The engine is just running too hot, and it might need to cool down before the next leg of the journey. So with this mix of incredibly strong long-term signals and these flashing short-term warnings, how do we map out what could happen next? Well, the analysis lays out a really clear roadmap of the key levels to watch. This table shows the key battlegrounds. To keep going higher, the stock needs to break through that recent high of 473. But if it does pull back, there are layers of support. And what's really fascinating is that major support level between 347 and 352. That's the point of control. the price where the absolute most shares have been traded. Think of it like a powerful magnet. Because so much business was done there, the price is often drawn back to it. So based on those levels, the report outlines 3 likely scenarios. Path 1 is the bull fantasy, right? Pure continuation, just blasting through the recent high. Path 2 is that healthy pullback we mentioned, where the stock takes a breather and dips to test support. And path 3 is consolidation. It simply trades sideways for a while, letting the market digest this huge move before it decides what's next. So we've got the bullish case, we've got the short-term warnings, and we have the potential paths forward. After weighing all this evidence, what was the analyst's final conclusion? The final signal is an unambiguous strong buy. The report concludes that despite the short-term risk of a pullback, the sheer power of this breakout, validated by that incredible volume, signals a fundamental shift. A new bullish regime has likely begun. So the crucial takeaway is this. The analysis isn't ignoring the overbought signals. Instead, it's reframing them. It suggests that any short-term dip isn't a reason to panic, but should instead be seen as a healthy and necessary correction, and potentially a great opportunity to join this new, powerful trend at a better price. And that leaves us with the central dilemma that traders face in moments just like this. When the evidence of a major trend change is this strong, what's the greater risk? Trying to time a perfect entry and maybe missing the move altogether? Or is it jumping on board a moving train that might be about to slow down for a minute? It's the essential question at the very heart of decoding a breakout.